It's Marion from Within. Many financial actors are struggling to find ESG data, the ESG data they're looking for, and they are frustrated by the price they pay for the data quality they get. Yet, the ESG data market is broad. There are a lot of new innovative offers, and we understood that the major issue for financial actors is that they don't know the offers on the market and they don't know the benefit they can get from the new generation data providers. So that's why we decided to do video interviews of next generation data providers to help our clients across the financial industry to explore the ESG data market. Mm-hmm. So I'm delighted today to be joined by Girish Narula, Urgentem CEO. Hi, Girish.
Hi, Mario. Thank you for having me.
Thanks for being live with me today. So we identified Urgentem as a climate specialist data provider. Your company was founded in 2016 and you were previously called Engage Tracking, is it right?
Yeah, that's correct. We have been in existence for a long while now. We started as an NGO, but Urgentem in its current form was established in 2016 as Engage Tracking Index Limited.
Good. So you are providing transparent carbon emissions data and climate risk analytics to the financial industry. Your emissions data universe encompasses Scope 1, 2, and 3. Is that right?
Yeah, that's correct. So we provide emissions data for Scope 1, 2, and 3. We cover around 4,500 companies directly, which we analyze directly. And then we have more than 30,000 securities for which we can provide emissions data based on our inference models.
Okay, so maybe before starting, you can say a few words about you before, and then we'll deep dive into your offer.
Sure. No, thank you once again for giving us the opportunity. My background is in banking. I've been in technology and banking for more than 20 years. I came into this field of sustainable finance pretty recently. It's been a steep learning curve, but the company has, expertise and climate scientists who have helped me learn a lot of things about this space. And as you can well imagine, it's a topical topic right now. Everyone wants to know about what's going on in ESG. And so it's a good time for us as a company to be launching our analytics platform. We recently launched a platform called Element 6, which provides a holistic view of carbon emissions and analytics from a bottom-up approach. It can help you analyze both at a portfolio, sector, or country level. And so we are pretty excited. And thank you once again for having us.
Good. So as you mentioned, you said you are taking into account Scope 3 emissions. How important is it for a company to analyze these scope emissions?
So we have been collecting Scope 3 emissions for 10 years now, and we consider ourselves pioneers in Scope 3 emissions. We think it's very important to look at the entire value chain when analyzing the emissions, because they form a substantial part of the emissions of a company. For example, you can take oil and gas sector, and the Scope 3 actually forms a large proportion of the emissions that come. But it's also important to keep it in context, because sometimes there are things, and it depends on how you're looking at it. If you're looking at a portfolio level, you might be saying, oh, are you duplicating, double counting things? But again, from our aspect, from our point of view, it's what is the end use case? If you want to analyze how big the footprint of your portfolio emission is, we think it's important to look at Scope 3 as well. Otherwise, there's a high chance that you will miss out some of the obvious polluting entities. And so, yeah, so that's quite important. And as I said, we have not just been collecting total Scope 3, but all the 15 categories of Scope 3. And that's something which our inference models are also tuned to provide when we provide data to our clients.
And how do you collect companies' data? Because sometimes they report on scope 3, but sometimes they don't. So how do you get the data?
Yes, and that's a challenge. We look at publicly disclosed data for the 4,500 companies. We also buy data from some providers. But when we buy data, we don't just buy the numbers, we buy the qualitative assessment that comes with it. And that's what goes to answer your question. So for example, when we collect the scope 3 numbers in the annual reports or the sustainability report, you might have a scope 3 total number saying X. But if you read through the report, the company would have said, by the way, the scope 3 number X only includes our business travel. And that's something which we make note of, and that's how we categorize our data and use it. So when our clients see it, they get that value added information, which if they just picked a number from another source or another provider, they may not.
Mm-hmm. Okay. And then how do you check the data quality? Are you doing it using technology, or is it your teams that are checking all the data?
So it's a mix of both. For example, because of our approach, we use the data in our inference model. It's important that the data is quality analyzed and everything is ensured that it's of good quality. Otherwise, you get into a problem of garbage in, garbage out. So one of the things we do is each company is independently assessed by 2 different analysts. That's to avoid any selection or sampling bias. Then it's submitted to an independent QA reviewer. And after it has gone through all these processes, we then have an in-house software that kind of looks like outliers and detects any issues that it might found based on historic data and trends that we have. And if after that we still have issues, then it goes to the head of QA. And only once the entire process is done, we call our data as data complete. And that's another thing that we provide to our clients. So when we provide the data, our clients not only get the data points, they get a quality assurance categorization by Urgentem. And they also get if the data was third-party assured by an independent provider or not.
Okay, and then that's a huge amount of data, and it's often changing. So how often do you use new data and add new data to your data set?
So for the moment, we only release our data set annually. But what we do is we have our collection process goes all around the year. It's aligned by the quarterly reporting processes of the companies. So if during the process of collecting data for subsequent years, we found that any restatements were made to the last year data or anything had changed, which is of material consequence, then we'll tell this to our clients at a quarterly basis.
Okay. And do you have other analytics available to investors to deep dive the climate risk after calculating the carbon footprint?
Yes, so that's where, as I said, element 6 comes into place. It's a tool that allows the clients to do the analysis at a company level. They can do it at a portfolio level or a sector level. It builds on our data set, which is a bottom-up approach. We then also overlay it with the top-down approach in certain areas. So for example, we have worked with leading IPCC lead authors, scientists to come up with forward-looking analysis. And then we have put that along to company level analysis so that you can see how a particular company should decarbonize to adhere to a certain scenario.
Okay. So you are providing sectors emissions, as you said. How deep dive can users go, and high stakes sectors, for example, are you doing a specific calculation for them?
So at the moment, we do the same calculation for all sectors, but you can go deep down drill into specific companies within those sectors. What we also do, and this is dependent on the client needs, we have proprietary models to do for certain sectors on where we allow them, for example, a steel sector, you can do emission intensity based on outputs, whereas our standard approach is based on revenues. But if a particular client is focused on that sector, we can do that as well.
Okay. So you said you have more than 4,000 companies analyzed, is that right?
Yeah. So we directly analyze more than 4,500 companies. As you can imagine, you can pick a number and you can say you can analyze 10,000 or 7,000. but there are not that many companies which are actually reporting data. So even within the 4,500 companies that we analyze, we do find a lot of companies do not have complete data or income, the data is not reported. But within that scope, we are fairly comfortable that we have covered all the major global indices and all the major global coverage.
And what indices do you cover with your data, and what are your data capabilities across asset classes?
So in terms of data indices, we cover all the major ones: MSCI ACWI, MSCI World, S&P 500, FTSE 500. Depending on our client needs, like we have clients in APAC region, we cover some of the indices that are relevant to them as well. And we keep on adding depending on how the client, if we get a client which requests a specific index, we cover. But because of our inference model approach, we can pretty much calculate emissions for any company.
Okay. And as you said, you are collecting data for more than 10 years. Have you seen any improvements in companies' reports or in?
Yes, definitely. Means as I said, I'm new to this field, but one of the first things I did along with the team was to look at the last 10 years of data and see how it has improved, because that's quite important for us to change our methodologies as well. And also it's quite important for our processes. And there has been a tremendous improvement. It's still not as great as people, especially in the financial services sector, would like it to be, because people normally relate data with, for example, interest rate data or pricing data, which is pretty much standardized and available in huge volumes. Whereas the emissions data is still quite patchy, but it has improved quite a lot. In fact, especially in terms of scope 3, we have seen a lot more companies now reporting it. There are still gaps. There are still quality issues around reporting, but I think you can clearly see the trend is quite positive.
And then is your data mostly used to do reporting, or is it also done to engage with companies to help them improve their impact?
So yes, and we do, our data is used for reporting, but it's also used for identifying opportunities. We provide a lot of forward-looking analysis, both through our platform and through our advisory services. We also help clients do corporate engagement, especially for asset owners. It's quite important to engage strategically with certain sectors. And we have seen in our life cycle, where we have been mandated to do corporate engagement over a couple of years, the quality of reporting and obviously the importance by the individual companies given to this topic in terms of their future strategies has also been increasing.
Okay, and then what is your client typology, and do you have specific use cases you can share with us?
Sure. We work specifically, or we focus on the financial services industry, but we work across the value chain. So we work with asset owners like pension funds. Most of them use our platform for reporting, regulatory reporting, for portfolio optimization on the risk management side, and also for strategic allocation and corporate engagement, as I said. Another key area which is becoming quite topical nowadays is to see temperature alignment. So we are working to add that module in our analytics engine, in our platform. A lot of asset managers work with us. They use not just our data because it's quite granular and transparent, so they can actually integrate that into their investment strategies. And we work with them through our advisory services and through our platform. Avoided emissions is another area where a number of asset managers work with us, and we have helped them build investment strategies around that. We work with a leading European central bank, and we have been working with them. And that's very interesting. We're working with them to build a methodology for climate stress testing. We hope that will be published soon, and that would be quite an interesting piece of work, not just because it looks at a number of things that we see the banks are struggling with in terms of availability of data is the primary one. And it can shed light on how to look at it and how to incorporate that to see what the future risk in terms of transition risk specifically can be. So.
Okay, so you are doing, you are providing data, you are providing a tech platform and advisory as well. So how
Yeah.
many people are in your team?
So we still have a pretty small team. We have a team of around 12 people who are full time, but we are supported by other staff as well. In terms of technology, we have a team of 5 people who are based in the company, and then we have support staff who helps us with other programs.
Okay, and what are the next steps for Urgentem? What are your next
Well,
objectives?
we are quite ambitious, and the fact that our platform has got us very good reviews, we have got very positive feedback. So the next step for us is to grow and scale by using the platform as our calling card. We would like to see more and more clients, especially on the asset owners and asset managers, using the platform. We have got some positive feedback, as I said, and that's what we'll be developing. Specifically on terms of our offering, one of the areas that we'll be focusing on in the next 6 months or so is to increase the depth of our offering around analytics, looking at specific sectors, especially some of those sectors which are high polluting, and how we could improve the analytics around that. We are building new inference models. We are working with a lot of academia and scientists to develop those things. And that's what we will be using technology as well, like AI tools that we are building to incorporate them.
So how is your platform concretely working? What are the features available on your platform?
So there are a number of modules. The one of the way to look at it, or the way we describe, is you can look at the platform in 3 main subsections. One section is for regulatory reporting and doing your reporting. The second is around risk management, which allows you to do portfolio optimization, look at performance attribution or carbon attribution. And the third is the forward-looking element, where we look at various scenarios. As I mentioned, the temperature metrics is one of them that we're going to add, and you can do a deep dive in terms of target setting, etc.
Okay, so it's adding extra financial data to financial data in the platform.
So it's adding the climate risk data to the financial data together.
Okay. I think I've asked all my questions. Do you want to say your last words?
No, I think as you know, most of us will agree that it's a huge challenge to manage transition risk and manage the low carbon economy challenges that are going to come. But I think for us as a company, and our ethos is that you cannot do this all by yourself, and even the larger players need to collaborate and need to work together with a lot of specialists, and that's where we would come in. And so our approach is all data driven, science driven. And one of the things that we bring to the table, which our clients really appreciate, is the transparency around a lot of issues. We are very open about what the limitations of this field are, and we are very open how we can help resolve or mitigate some of them. And I think that's hopefully the way forward.
Okay. So thank you very much. I hope you all know better about Urgentem now. We will put the link of your website down the video, and feel free to contact you, Urgentem, or us if you have any questions about the platform, the models, or the data. So thank you very much for your time, and
thank you, Marian. Thank you.
have a good day.